Enthusiasm is the electricity of life. How do you get it? You act enthusiastic until you make it a habit. Gordon Parks. My friends, I don't have to act enthusiastic about the stock market, about trading, about charting, because I love it. I bring this to you each and every day for free. And I haven't told this story in a while. So would you give me just a couple minutes to tell you why I do this? Those of you who've listened for a long time, you know why. Those of you who don't, I'm going to tell you. It is because when I was a young lawyer many, many years ago, back before the dot-com bust, and there's probably some of you right now who are little babies, if even born back then, I went through the dot-com bubble, and I had my first 100,000 or so early on in my law practice in my 401k account. Now, I had an undergraduate degree in business, an MBA, and a law degree mostly concentrated on business law, corporate associations, all that kind of stuff, tax stuff and all. Thought myself fairly savvy, didn't know a lot about how to trade, but, I thought I understood the way the world worked. And I watched with the dot-com bubble, and of course, since I was young, they have you choose a lot of times, want to be aggressive, do you want to be conservative? Do you want income? Do you want to grow? I wanted aggressive because I was young and had my first sort of stash of money there and wanted to see it compound. So it did. It went from $100,000 to $300,000. Each and every month it was just cranking up. Then the dot-com bubble burst. And guess what happened? It started going down about $30,000 plus a month. It went down, it went down, it went down. After the first month or two, I called my broker and I said, dude, let's just go into cash and let's wait for the market to bottom and then we'll get back in. Well, I was told I didn't know what I was talking about. It could turn around any time. Let's just stay in. So I did. I listened. And what happened? I crashed all the way down to like $98,000, $99,000. Lost everything plus a couple of thousand more because I couldn't read a stock chart, or at least I didn't trust my own intuition. Was, why ride this crashing thing down? Why catch a falling knife? Aren't you going to get cut? Yes. And at that point, I determined that in the near future, I was going to learn how to read stock charts. I was going to learn how to trade for myself, and I eventually did. And I said, you know what I'm going to do with this knowledge? Because I couldn't find anybody to help me, to tell me much of anything. The internet really wasn't around. You could buy some books, but most of the time they were sort of the fundamental analysis, which is great, but doesn't help you in making a buying decision. I mean, again, if you could find out that Black Friday was coming up, would you buy that brand new TV set on the Thursday before Black Friday and then all of a sudden find out that the next day it's 30% less or more? Wouldn't you feel like an idiot? Well, see, that's what we do here when we go through technical analysis, is we find the buy points, the sell points. Now, again, I'm all for fundamental analysis, but I want to know when to buy. I want to know when to sell. And that's what us going through these markets each and every day teaches us. So 10 to 15 minutes, that's all we ask. Thank you for bearing with me and hearing my story. I just think it's important. And I said, you know what? When I discover this knowledge, I'm going to figure out how to share it. And I did. And we're going on 10 years now here at Charting Wealth, sharing this information with you and our love for trading, our enthusiasm for charting, and the excitement that the market brings each and every day. Let's jump into the charts. Everything up for the day. The biggest gainer is Bitcoin. Let's look at where we are with the S&P 500. We're going to have a Santa Claus rally. Things continue to go up 0.62%. We can see that as we finish Tuesday, we may be about halfway there for average volume for the week. We can see on the Tuesday, Wednesday candle as we look at things, we can of course see that we are not average on the volume. We will be of course starting a new candle tomorrow and we'll see where that takes us. We look at where we are on the charts when it comes to the half-day chart. You can see in the morning we had below average volume. In the afternoon we had above average volume, so things started going up. We can, of course, see on our charts that we are above the weekly trend line decently on both the half-day and the 2-day, reaching higher highs, things looking well. You know, we talked about the Trump pop and then the move down, and then slowly and steadily it has been continuing to grow, reaching higher highs. Look at the Qs, really rebounding nicely, 1.24%. Took it longer to get going. Last week it didn't reach the high. It had been the weeks beginning the 4th and the 11th of November, but then this week it is climbing up there nicely. Maybe we'll get to average volume on the weekly. We didn't make it on the last 2-day. But we look at the half day, above average volume in the morning, not quite average volume in the afternoon, but going up nicely, 1.24%. Again, well above the weekly trend line on the half day and the 2-day charts. What about 20-year U.S. government bonds? Up for the day nicely, 1.07%. We saw that turnaround. I wasn't excited about it because it didn't meet my standard parameters. Although, if you guys will remember, I told you, if you look back in time, you can see that we don't have a lot of spinning tops when bonds really take off. We did, of course, on our most beautiful climb in bonds going back to October of last year. The end of October, we had, of course, look at all of that energy finding the low, and then the green spinning top turnaround, and then the takeoff. You guys remember us trading that? Those of you who've been with me long enough, you do. That was beautiful. When it doesn't set up that way, I got plenty of other things I'm going to trade. But, of course, if you just want to stay in bonds and watch and see, you can sure do that. We didn't have any of the volume to meet any of our criteria. Still don't have average volume on the 2-day either, just like the weekly. And the half day, as far as having volume, we had average volume in the morning, didn't have it in the afternoon. Down in the morning, actually down Tuesday afternoon, down Wednesday morning, and then popped up strongly Wednesday afternoon. What's up with gold? Gold up 0.30%, 0.3%. Again, don't know if we're even going to get to average volume this week. Didn't make that last week. Low volume when it comes to the last two-day candles, which were green spinning tops, not quite dojis. And we can see some up movement in the morning, pulling back a little in the afternoon. So again, gold just sort of sliding along. Now, where do I think it's going? Based upon the classic turnover and all that down volume the week of November 11, I think gold is just sort of hanging there. You know, it's going to do one of two things. Going to go up or down. I'm not betting on any of it right now except for what has occurred and what volume showed us, and the lack of any volume here. I think gold's probably going to just slide on down, but it could be wrong. Now, as we talk about gold, as an aside, let's just take a look at silver. What is up with silver? Silver down the last 4 weeks. This week, again, just a doji, lots of indecision. We do see the latest 2-day candle in the last 2 days, silver trying to move up. So tells us a little something. Doesn't tell us what gold's going to do, but nice to always see what silver's up to. Now, let's move on to HODL. That is the Bitcoin ETF. People ask me sometimes, Tom, why do you follow the Bitcoin ETF instead of Bitcoin? Because when I am going to trade Bitcoin, when you're going to practice trade Bitcoin, how are you going to do it? If at some point you do decide that you have the skills and you want to spend your own money and you want to trade, and again, we're not a stock calling service, we're darn sure not a bit calling service, we're an education firm, you and you alone make up your own mind on what you want to trade. But say you did at some point. Do you want to put your money on one of those crypto exchanges like FTX? You know, that again, might not be regulated, might crash. the money might be stolen as opposed to an ETF. Why do you think these ETFs came about? Again, they're under American law. They're under SEC supervision. Are they perfect? Of course not. There can be all sorts of problems with any ETF. However, I feel like they're a whole lot safer. That's the reason we're tracking them. I am much more likely to trade this ETF instead of Bitcoin itself. So that's why I track it. And when we compare it to the 24-hour-a-day Bitcoin, they're pretty darn similar. So I'm going to stick with the one I'm more likely to actually trade. That's what I want to practice because remember, you're going to play as you practice. So what do we see going on with the Bitcoin? Up 3.43% for the day. You can see on that 2-day chart where things have sort of topped and sliding sideways. Got a green spinning top. No volume for the last 6 days on the 2-day chart. You can see we had average volume in the morning on Wednesday and decreasing in the afternoon as the price popped up. But again, not a lot of action here. We haven't hit the high that we hit 2 weeks ago on that week beginning the 18th of November. So we'll keep an eye on Bitcoin, see what it's going to do. Little long today in the tooth. Thank you for listening. Every now and then I'll explain a little bit of my history to you. I hope you found it helpful. And God bless you guys. Hope everyone's looking forward to a great Christmas coming up soon.